So let's go to this week's calendar. What we have is tomorrow we have the CPI and core CPI from the US. So this is going to be important, right? Because CPI, core CPI is directly related to inflation. Okay, and on Friday we have the pound GDP and prelim GDP. That's also very important because again, if this is coming in at negative, it's actually a contraction in the UK economy, right? And that again opens up the possibility that we might go into a global recession in 2023. Okay, from a technical point of view, the US is already in a recession because consecutive GDP has been negative. So the US is technically in a recession, and a lot of people are talking about, next year we are experiencing a recession, right? So do take note of this data for the week is relatively quiet. Okay, so not much that you need to pay attention to. Just have in mind, tomorrow we have the US CPI, and then on Friday we have the pound GDP. Cool. Okay, so with that, let's jump into the chart. Kickstart with the dollar index. Okay. So as I mentioned, you can see the NFP came in, but the dollar index didn't really move much. Okay, it's basically still within this range. So for now, going into this week, I'm actually holding a bearish perspective on the dollar. Okay, so my view on the dollar index is essentially still short-term sell. Okay, with a potential target around 103.70. So I'm expecting this week the dollar to continue weaken. Pulling back towards 103.7, and then maybe around that zone we might get a bounce up. Okay, so over here I'm gonna be looking out for short-term sell dollar, and the opportunity that I think it's clearest in terms of some of the major pairs will be on the euro dollar, Aussie dollar, and dollar Canadian. Okay, so we're definitely gonna look into that. Okay, so if you can't trade the dollar index directly, obviously what you're going to do is you're going to leverage on some of the major pairs, right? As mentioned, euro dollar, Aussie dollar, dollar CAD. Okay, so if you take a look at euro dollar, since last week when we touched on this, it's still within the range. Basically what you're seeing here is a strong push up, and then it's consolidating since mid-July. Okay, I would say almost an entire month of consolidation. Okay, and this is again why I always say don't trade the correction, right? Don't trade within this phase because it's just tough. Okay, the market is not moving a lot, it's choppy, and if you try to catch a trade within it, you're gonna be psychologically affected. Okay, I just want you to imagine, right? I mean, let's go back a little bit. If you saw this move to the upside, you got super excited, you decided to jump in on the buy trade, you put your stop below it, your target at the top. Okay, and this is 20th of July. And I just want you to think about it, it goes down, it goes against you, you get a little bit worried, it went back up, you get a little bit more, calm. Okay, and then it went back down, you get a little bit worried, anxiety, right? And then it starts to go up a little bit. Oh, you start to see, whoa, coming back down again. You get worried, and then it went up. Okay, at one point in time it went up quite a bit. You get excited, you get happy, right? Whoa, finally in profits. Okay, and this whole thing just play out like that, up and down, right? And I just want you to imagine throughout this entire duration, if you're in a trade, whether it's a buy or sell, right? Within this entire phase here, your emotions are gonna following the market up and down. Okay, and it's not gonna be beneficial to your trading because with that, you're gonna make maybe some silly mistakes and things like this. Okay, so try to avoid being involved in a trade when the market, is clearly developing into a corrective structure. Okay, and most of the time, when the market ends off as an impulse, which we'll talk about it in a couple of examples later on in today's sharing, you want to avoid entering onto any trade, right? I always say after an impulse, give it time, wait for it to develop, then only you jump in on the next trade. Okay, so this is the same idea over here. You can see that happening on euro dollar, right? We get a very clear consolidation as of now. So my direction on euro dollar is to look for a buy, at least for the short term. Okay, so two ways to get involved in this trade. You either look for the break above the high of 1.02 1.075, right? Or you can wait for a pullback towards 1.0095 to get involved in the buy. Okay. So again, you need to have your strategy, right? Whether you're looking for a breakout to get involved in the buy, or you wait for the pullback and then get involved in the buy below there. To me, as long as the euro dollar is still developing this pattern, the probability to the upside is still rather high, and I would rather focus on the direction. Okay, so your primary level here for the top side for at least TP1 you want to take note of is around 1.04. Okay. If that level breaks, then of course you can look for the next high, which is going to bring you back up all the way towards 1.06. Okay. So the upside, of course, if you're looking at a breakout of 1.0275, then your first take profit might not be very worthwhile because the room for you to profit is not huge. Okay, but you might want to take profit at a higher price point. But just monitor, how price react around 1.04. Perhaps you want to consider shifting stops to break even and things like that to manage your trade. Okay. If you're looking for a retracement back towards 1.0095 for you to take the buy, then the risk reward is definitely worthwhile. Somewhere at the bottom here, you can see risk reward for take profit 1 gives you about 1.7. If you extend to TP2, that gives you 1:3. Okay. So euro dollar, very clear in the pattern, in the structure. The direction bias is very clear. Focus on the upside. Okay. The other one here is Aussie dollar. Okay. Aussie dollar, for those of you who are more aggressive, you might want to consider, looking at a potential trade at this current price point. We do have this bounce up, a little bit of a crawl, and then the market pulled back already in wave of 3. Okay, and it kind of broke the trend line over here. Okay, and right now it's doing a little bit of a consolidation. So overall, I'm still expecting one more push for the Aussie. Okay, back towards this high somewhere around this level of 7.240, which in line with dollar weakness. Yeah. Okay, so some key levels for you to consider. Take profit around 7.240. The stop loss, if you're looking for a buy, it needs to be above, price needs to be above 6.865. Okay, so that becomes your stop loss, right? Because if the market comes down and break this, then you wouldn't want to be in a buy anymore. Okay. So as long as the market maintains above this level, 6.865, I'm bullish. Look for buy opportunity with a target around 7.240. Okay, so this is again in line with selling the dollar. Okay, so Aussie dollar quite clear, euro dollar quite clear. We have the New Zealand dollar here as well, but just do take note that Aussie and New Zealand, they are very, very closely related. So personally, I'm involved in Aussie, so I'll just avoid New Zealand. Okay. Okay, dollar Canadian is also developing a very, very clear structure as of now. Ideally, I would hope that this came up a little bit more. Somewhere around 50 and 618 is what we shared last week. But market is never going to be perfect. Okay, so what we have right now is kind of like the head and shoulder pattern. Okay, we have this low here. The market put in a recent high and then went down quite sharp as an impulse. Okay, so what I'm looking out for in terms of dollar CAD is if this develops into a corrective pattern. Okay, and more importantly, if the market is able to break off this level here impulsively to the downside, we have a trade. Okay, we'll have a trade to the downside. So keep an eye on this level, 1.2820. Okay, with a potential target at 1.2530, and your stop here will be around 2985. Okay. So this one here, I think by tomorrow you might get a trade. Okay, in line with again tomorrow, the US data is going to come out on CPI and core CPI. That will give us the catalyst for an impulse push in the market. But of course, it doesn't mean that the dollar is definitely going to be weakened. It's more of like using technical analysis. I've identified the direction I want to focus on, and then I'm going to utilize a potential news that's upcoming to give me that fuel, right? To give me the catalyst to move the market, right? So in terms of the major pairs, we have the euro dollar, Aussie dollar, and dollar Canadian. All three of this, I'm looking at selling the dollar. So do take note of your total risk exposure as well, right? Because if we are looking to sell the dollar and the news actually go against us, do take note of the risk as well, because you can concurrently lose 3 trades if you don't manage it well enough. Okay, so hopefully it's clear so far in terms of the 3 opportunities to keep an eye on.